So, welcome everyone. This is a strategy that I'll be teaching you guys. It's very simple and easy to do. What we're looking for it's just a candlestick, that's big, and then a wick. What will I do the wick with now? Okay, I can use this. A wick, and a candlestick. Yes, a wick and a candlestick. So the wick is called MSS. That's markets social shift, and the the candle is called F fair value gap. Okay, what's happening now? Sorry. Let me take all this out. Not necessary. What we want is just you will for an uptrend, you identify where the market leaves a wick. You know what a wick is now? That's a candle and small and a line, tiny line like this. So let me say this is the candle, this is the candle, and then a tiny line will be up of it. That's what we're looking for. This is what we call MSS, market social. Then the next thing is a big candle. It might even be two or three. Yes. This is just what we're looking for. As long as it follows the trend, it works almost every time. So we're looking for a wick that cut across to a candle, that the other side of it is a candle. So literally you can put a line like this, and when you do, the wick connects to a candle body, not a candle wick. You know some candle has wick, right? It connects to the body, not the wick. That's what we're looking for. That's the main thing we're looking for in our charts. If you see it, especially when it goes along the trend, for this now, because literally enter the market. If it comes here as buy, stop loss there, and it works almost every time. So it's easy to do. We'll just pay attention to it, and then we'll go look for it right now in the charts. Fine, let's go back. This is XA, this is good. It works with currency pair that has USD in them. You get, but you're only looking for this in the 30 minutes time frame. Only 30 minutes of 1 hour. Yes, 30 minutes and 1 hour. That's when you can look at them. So let's go back in time. Let's go back to, okay, this is September. This will be last year, right? Let's start from November here. Last year. First, know the trend. So to know the trend, you have to go to the 4 hours candle. Yes, to know the trend of the market. The 4 hours candles, make it small. This right now is an uptrend. You could see from here, lower low, lower high, lower low, lower high. Then it changed trend, and I went to higher high, higher low. So this is practically an uptrend. But you don't do this in 30 minutes, you do it in 4 hours time. So you know your trend. This is an uptrend. So what we're looking for is buy for now. That's what we're looking for, buying opportunities. So after you know your trend, the next thing we should do is look for what I just talked about. That's the tiny wick and a big candle combined. So anyway you see that, you just pull your line. This is it, right? Tiny wick and a big candle. Don't go and put a big candle and a tiny wick and a big candle. And the candle, the wick must be in the middle of the candle. The middle, it can be here, but it should not be at a wick. No. So this is very, very okay. But the market did not come back to it. If it had come back, you would have literally put a buy here, stop loss above, uh, below, and 1 to 3, 1 to 5 will always be in profit. But this one did not work. This still did not execute. So let's go. So you know what I'm looking for, right? A wick and a body. This is one here. Don't know if you guys can see it. This is it. A wick and a body. And when the market closed it, the market came back to touch it. And literally, you can literally put this here, your stop loss under here. You could say give you 1:4, 1:5. And then there was nothing here like that. Remember, you are following the trend when doing it, right? So here we have another option here. This is it, a wick and a body. So you can plan to buy here. It does not happen every time, so you can put pending order in case you are not around, but it did not activate. So what do we do? Let it go, remove it. So even the losses we took, the funny thing is that, let's take a look here. It did not work here, right? It did not. But let's see, it worked here. So the market came back to respect it. I don't know if you can see that. Like the market came back. This is it. This is where it happened. The market went up. It should have come back here, but it did not. It still went up again, did his own whatever, and still came back to touch it before going up. So if you had put your trade there and waited, you would have been in profit. This is what they call fair value gap and market structure combined. Mixture of both of them. BOS. MSS, market structure shift, or BOS, break of structure with fair value gap. So let's count it as a win-win. 1:5 is okay. 1:2, 1:5. That's for every $100 you risk, you get $500. This one did not work here. Why? This is a wick, but it's in a body, like it's in another wick. What we're looking for is big fair value gaps. That's the candle that are big, and the market will come back to hit. Now, one of that thing you should take note is always follow the trend. You get, always follow the trend. We've been on an uptrend, right? So there's no need time to sell. You can see some sell opportunity here. This one is a very clear sell opportunity. This place here, right? It's the big candle, and you can put your trade here. You can sell. You will sell. Look at it now. For example, you would have made some profit, but you still end up in loss though. Even here also. Here you would have made good profit. Why? This is the wick, and this is the body, and the market came back, respected it, and sold. Let's see what would have made. So we'll always start getting what you should tell you, but make sure your stop loss is always above the big candle, like above it or under it. You get, this is good 1:4, like, but we don't go against the trend until we confirm that the trend has reversed. So let's go. There's nothing here for us. Market went up, came down again, then it did another one here. I don't know if you noticed this one. Perfect. And what did the market do after selling? After selling, it came back again to touch it, then it went down. So you see that it works almost every time, right? There's no more stress in it. Just pinpoint. The moment you see that a break in the candle, put your shots. Well, that's a sell. We're not selling, we're buying. I missed this one. Well, that's a good sell. Just follow the trend. For now, the trend has changed. Yes, it's now selling. You could see it selling, right? But since we say follow the trend, we started with buy. We'll be holding on to that buy for a while. This place, the market moves and works only in a market that has a trend. This place now, this angle here, this whole spot you can see here is what they call shabby market. It's not buying, it's not selling, it's just ranging. Yes, ranging. It's not worth your time and effort. These ones we had market was moving. They had a direction. You get, so that's where you just look for market that has a trend. That's where you trade, okay? So let's keep going. Let's keep going. This is one here. I don't know if you notice this one. But the market did not come to it. You did not expect it, so that one will let it go. The market ran away, so this one did not count. But this one did though. How many of you noticed this one? This one counted. But it take a whole how many days before to activate, and it's not worth it. So let's let it go. So mind you are taking an uptrend, so we're looking for wick and body close. Wick and body close. This did not work because it's in between two candles and it's not a big candle. It's not like a coffee candle. It's in between, so it did not work. This one worked. Yes. This is the wick and this is a body, but it went against us. So let's say it did not go though. It's not against us. Let's say you enter the market now as a buy. Yeah. Remember, your stop loss is always below the body, the big one. So if we had entered here, we would have still been in profit. Or it would have taken time to get our profit, but it would surely be in profit. Surely be in profit. So now let me show you something that you should always put your stop loss. A place you should always put your stop loss. See this one right now. Okay, this one did not. Our stop loss should always be below the body. You know we marked this market right with this, like it was this break from here. This is the wick, and then this is the body. So our stop loss should be below the body. Yes, always below the body. Always below the body. Then you target 1:3, and you are good. So it still give us 1:5, 1:4, 4.90. That's almost 5. So it works. This one below the body. Very important. This is our wick here. You see, this one was below the body, but this is the body here. This is where the body ended and it was below it. So give it some space to breathe. That's how we do it, okay? So where were we? Okay, we were here. Below the body. You could see if you had put your stop loss close by, you would have had the loss. But since it was below the body, it came back and it went up to your TP. 1:3. This is a 3.29 right now. 1:5. It can do 1:5, but it does 1:5 most of the time. But 1:3 is very okay. That is if you risk $1, you get $3. You risk $100, you get $200. It's very simple. See now, 1:5, but it will take time. Let's drag it to the end of the world. It gave you 1:5, right? Well, it's not really worth it. Sorry. You're 1:3 and you are good. So now you know where you put your stop loss, right? Then your take profit is always 1:3, 1:4, 1:5. max. And what it means, just in case you are new to trading view, I'm taking it down. You could see 4, 46, 43, 42, 41, 39, 38, 37, 36. That's what they call ratio. This is one less than one. This is 1 ratio 1.15, 1 ratio 1.40. That's what you're risking. If you risk $100, it will increase. Now let's say this is 1 ratio 3 points, 1 ratio 3, right? Now if I risk $100, I'll get $317 profit if the market touches my profit. But now there's one thing again I can do. If I decrease it, you see that it reduces. If I increase it, you see that it gets close, right? That's it basically. So just that for that. So now let's move further, please. Let's find more opportunities to buy. This is not valid. It's a bit valid though. It's a bit valid. It's a bit valid. So we enter buy because it closed with the body. Buy. And where's your stop loss? Always below the body. You see this trade went perfectly well. 1:3 even gave us 1:5, and he's in profit. There's no loss. This is how it's done. This is how it's done. This is how it's done. This one did not close. The body did not. This one closed in a, like it did not close in a body. Closed in a body is a complete body, not a body weak. No, not a small shoulder. So it is not valid here. So we can put this one here to wait. Over here, the market has just been shabby. Know what you are looking for. A week that tagged along to a body. This is a week, right? That tagged along to a body, and not just any body. A fair value gap. That's a big, like an engulfing candle, right? So yeah, we have an opportunity here. This is a week, and this is a body, right? You agree with that? I kept this one down here to see if the market comes back to it in the future. A week and a body. What do you do? Since we have been buying on, so that's the thing you should be doing. Now you can see if you enter the market. Yeah, it gave us our 1:3. No pressure, no rush. No pressure, no rush. He can still give us 1:5 even. But now the thing is this: whenever you place a trade like this and then it ends in loss, like the market touches is in loss, just know that that trend has changed. So you should be going for reverse. You should be going for a reversal. So there's nothing here valid. This week's here, look at them. They didn't end in a body. They were all in a whatever. This is all shopping market. It's not worth your time and effort. So let me take this off. Yeah, we have one here again. You see it ends in a body, right? Although this one now did not give us our entry. It did not enter. Like it ran, it came back, it did not touch it before going up. So we miss this trade. Even down here also. Yes, it's in the body, but it not give us our entry, so we missed it both. Uh, so where were we? It didn't hold. We have 2 weeks here that didn't hold. This one did also. This one wasn't in the body, was it? Was it in the body? Okay, close in the body though. Yes. So it gave you an entry, right? Stop loss below the body. Take profit. It will still give you 1:3 no matter how wide your stop loss is. And then it came back again to do the same thing. For a sell now, for example, if you're this is why it's good you face only one trend. If you had entered as a sell, yeah, this is a valid reason to enter as a sell. This place here, because it closed in a body, right? The market came back and passed there, so it's not even it's not worth taking at all. Follow one trend till that trend fails you. Basically, that's it. We have this, but it's not solid. It's not solid. It's not solid. It's not solid. Because what we're looking for is a fair value gap that has. Let me explain what it means for you now. This body right here that we took, it has one under. That's See, this is one body that's like right. This is one, and then another one above before we entered. You get here right now. It's not solid, so you don't do, but you can plan this one. Let's see, perfecto. So the this guy didn't work. Neither did this guy. Okay, let's have one loss. Let's have one loss. Let's have one loss. And it's still not a value because it's not a value there. It's not an graphical, like it's not a value. It's closed at the week. If it had closed at the body, I would have said okay, let's have one loss. You get, or better still, this one closed at the body, right? And then it came back. So let's try first a trade here. Let's say okay, let's say we enter the market here as a buy, we had one loss. Because I did not buy. Yeah. One thing you should know is that whenever you have a loss, it shows that the market is changing its trend. But the market is changing its trend. It's no longer going that direction. It's not giving you a new trend. So now we'll be scatting out for sales. That's what we'll be scatting out now. For sale. Let's see if we can find anyone here. Nah. No. This is all the shopping. This is the shopping market. Mm, this would have been valid though. Like this one here is valid. Very valid. That's to say, tell the market here sell. Remember your stop loss is always above the B candle. 1:3 got in 1:5 shake. You see the win rate. That was starting for sale. But many opportunities to sell are not really here. Let's see. There's no opportunity to sell. The sell should have been here. The week would have been here. And the body would close along. But it did not. So guess the market is still shabby. Or it will give us a buy. One of both. So it does not happen. At least you see one in a day. This USD pairs, any pair that has USD in it, it happens there a lot more. It happens there a lot more. Now, okay, we're in 2026, right? This video is going to take a lot of 24 minutes. Let's see if I can round up before 35 minutes. You just know what you're looking for, and I want you to also do a example, like look for it. No, there's nothing here. For sale, there's nothing here. There's no opportunity to even enter the sale here. It happened here, sure. Well, I think we will still take stop loss. A graphic candle, it entered perfectly well. Fair value gap, and then above. And this are the first trade that did not give us 1:3. So let's say this market touched stop loss because we're targeting 1:3. It did not touch it, and then it went back and touched our stop hit us, kick us at. So finally, we are now looking for an uptrend. Remember, when a trend changes, when you have stop, you hit a loss, it means the trend has changed. The trend has changed. So now we're looking for buy. So no, no. Well, what the many losses two, I think. An opportunity to buy, none is showing. These are all shopping markets. You know what we're looking for, right? This is it. Something like this. Because this is a week. A buy, it's up we're looking for. We're targeting up. This is something we're looking for. For buy, you target up. For sell, you target the wicks that are down, facing down. You get, but for buy, you target the wicks that are facing down. So this is a week. And then an engulfing candle, that's a fair value gap candle. It closed in the body, not in a week. It closed in the body, and you enter by put your for a market like this now that has it will still give you 1:5 for sure. But I want you to know something. For a market like this that has a big we also see this candle, right? So a long go down, a big body and all that. What you should do, because of your stop loss, target half of it. Half of it to be here. Like this body is the body you just put in the body. Yeah. The body. Target 1:3. Would have given you easily, swiftly, very soft, 1:4. You see, but if you want your 1:5, you can now let's see. Even when the market after attack first because the market came down again to almost our entry before going up. But did it go up? It did. Perfectly well. So there's another one here. But it did not work. It did not hold. Market did not come back to touch it for going up. So that should be market because these are the wicks. Nothing here. This one also. Nothing at the other side. Nothing. See from back here, right? This one had something, but the market did not come back to it. Market ran away. But since he ran away, no problem. He gave us another one, if you can see it. Perfect. He did not still give us entry. He ran away too. Run away. Oh, sorry, I didn't sing that song class. Run away. You don't force it, you let it go. Why there's always opportunity every single time. This one kind of to enter the market most times it's just pending order or you are online. If you are online, you see it and you can take advantage of it. This one also run away. You can easily take advantage of this one to well, let's assume you run away also. Let me just see if it gives us a 1:4. Right. It did, but ran away. So like we have two now that went our direction, but they all ran away. Nothing here. So put the week we're seeing now is this up one here. So let's still be going. Remember we're only buying. So this week that are done here are not valid. What we're doing is buy, nothing else. So nothing. This one did not close in the body, it closed in a week. So you see where it's closed, right? It's not valid. Take it off. Now this is something. Close in the body, right? Enter the market as a buy. Yeah. But there's one issue. Remember I said our stop loss is always the big candle, so it's always below it. It was below it, but we got stopped out with just 1 or 2 pips. This would have given us a good profit, see? But we got stopped out. So what do? Let's count it as loss. From his loss. With 2 pips, that made good profit from there. But let's count it as loss. Now there is another one here. Many of you can notice it. And what did the market do? It came back, touched it, and boom. Stuff like this, I told you, if the wick is too big, you place your stop loss half of the wick. So this is especially the body. Look at it. It's below the body. Very below the body. And it still gave us what we wanted. And then nothing else again has popped up. This is the wick. There's nobody that's closed above it. Okay, it happened though. Let me take this one star down out of it. Now it closed, it went up, it did not come back to it. So it was still giving us. I mean, if you notice this one here. So you put your entry here, stop loss under it, or even half of it. 1:5, 1:3, sure gone. You see how sweet it is, right? Very, very, very sweet strategy that gives you back-to-back profits. This one is not valid. This one is not, because it closed in like the wick, not the body. So we're not taking it. Still going. Sorry. Our line should be up here now. In case of anyone that breaks that, right? You could see. I mean, if you could notice this one down here, that the market one did not give us an entry. It broke. It gave us an engulfing candle. That's a fair value gap. It broke out of it, and then it came back to touch it again in this place. And then what happened? Boom. Remember, your week is always like 1:21. Who does that? But we're targeting 1:5. That's to say, if you risk $1,000 in this trade for your stop loss, you can make it $21,000. Like, you see, I respect it, right? Perfectly well. Remember, we're only buying. And right now, there's no opportunity to buy. So, what do? You hold. But most times, you tend to have a loss before you start to see that trend popping up. You get. So this is it. We have not had any loss, but the trend right now is downtrend. This place we're seeing is downtrend. Very downtrend, and the downtrend is even more valid. Like, for example, now this. Okay, that's a body. That's a wick. This one is giving us a vibe for a sell. You can tell this one as a sell, very valid. Came back to it, touched it. Stop loss above, right? TP above. Very valuable. No, we're not taking it. But we can take this one though. This one, we can enter this one. This is the body. It broke out, it came back to it again, and stop loss above the body. TP down. So you all have seen countless ways, right? So I want you to do this yourself. Now, because we're taking a sell, this would have been very valid to enter as a sell. Yeah. But then we took the sell and give us better loss. So, and mind you, for every loss, it shows the reversal of trend. So what do we do now? We start looking for buy opportunities. This close, that's almost in a body. But in a week, but let's give it, like, let's accept the fact that we took this trade and we had a loss. Why? Because this is where the body ends, and we still, so we had better loss in this one. Does that mean the trend has changed? Not really though. But the possibility is still there. This one will work perfectly well. You see, in one trend, one market, I'm showing you guys countless opportunities now, countless opportunities to make profit from. It stays here, and boom, what should tell you? Sure, go. It happens, it happens, it happens, it happens. So this is it. Lots of opportunities every corner, every corner, every corner, every corner. We can even make this one happen like right now. See, lots of opportunities everywhere, every corner. This is just a strategy. So you do the same thing, go redo it. There are still more days to cover. Still more days to cover, but let me save your time and stress. Like, for example, now look at this one for a sale. You put your week here. Well, it's not cut for sure, but because it's too big, you put your sell here. This target for TPB above 102 is not worth it. This one, and the perfect one, would have been this week here. Yes, if you had entered here, put your stop loss above 1:5. Like, okay, it will not count. It will not count because that's the body. We need a reversal, so it will count only when it comes back to this place. Boom. And I'm in profit. Let's see if this get or not. We did it. We did 1:0, even more than 1:6. So this is it. You know what? Let's just count. Even in this one right now, there are also many more opportunities there. Like, this is very valid. And then it started selling. Let's just count how many times. How many times we are in profit and we are losses. This is February. We did it February 18. So this is one profit. I started November, December. This is two profits. This is one loss. So let's count everything. 1, 2, 3, 4, 5. That's 2 losses there, right? 6, 7, 8, 9, 3 losses. 10, 11, 4 losses. 12, 13, 5 losses. 14, 15, 16, 17, 18, 19, started November, yes. 19 trade, 5 losses. And these trades, they give you 1:5. Now let's do the math. Sorry. Let's just put every information there. 19 trades minus 5 losses. You could do the math here now, minus 5 losses. That's equals to 14 wins. Fuck. And these 14 wins, okay, let's say the 14 times 3, and not to put times 5 because almost all of them gives you 1:5, right? But let's do 14 times 3, 14 times Don't mind me just trying to do this here. I like math, so I'm doing it in my head already. 40 times 2, it's 42. You could do your calculation yourself. Equals to 42. 42%. Not be juju be that. That means if you carry $1 to this market, you would have made $42. $1,000, you'd have made $42,000 profit from only this 19 trade you took, and you the losses you have. You could see the importance, right? You could see the importance, and it's happening every day. Let's go back to time, present time now. Okay, this is where we are right now, present time. This is where we are right now. Okay. It's popping, it's popping. So we did it in close to this place. No, this is, I think this is the trade I took before now. Yeah, this is trades I took. So these lines, let's take them all off. You could see I'm plotting and I'm waiting here, right? This one. For the sale, it did not work. This one also is not valid. I placed it here, but I did not even tell, I was not lying. I was expecting a set to happen here. So we can add this one to a loss. So let's see, with 220 trades, we lost 6. Not a good bad win rate, right? That's almost 70% win rate. So this one is not yet activated. This is line from. I have no idea. Go back. Here right now, the perfect line would be looking for a test of this one, because it's already having a body, or this one, because it already have a body. Just so if the market comes back to this place, I went as a sell, or it comes back to this place, I went as a sell, because that's the trend right now. You get. So this is me, and this is my strategy that works magic. New strategy for that matter. Thank you guys again for the time and everything. I appreciate it.